I have been really big on clean energy stock because that industry has been rocketing. A great play in this industry happens to be electric vehicles, and Tesla is a big player there. What other stocks could give this stock a run for its money? Let's talk about it. This is my green, my clean energy section right here. And I saw somebody saying that Tesla is getting beat. They're getting beaten up in Tesla. I think that the two stocks that recently split in the NASDAQ were the two stocks that have been helping to drive the NASDAQ when the market was rocking and rolling. Now, I'm not trying to say that because today the market's going down, that the market's getting ready to fall off the face of the earth. That's not what I'm saying. But the same couple of stocks that were really pushing the NASDAQ higher are the same two stocks that are helping to pull the NASDAQ down lower. Tesla is one of them. But this is my clean energy spot. And this week, we're concentrating on electric vehicles. So there are stocks that are making the news in the electric vehicle space, starting with NIO. Other EV maker stocks fall as Tesla extends on the pullback. Shares of NIO sank 4.6 midday trading on Wednesday as they pulled a sharp U-turn after reaching an intraday record earlier in the session. Well, Tesla was hitting all new highs, followed behind another electrical vehicle company. NIO was running right along with them. But this is a China-based company for electric vehicles. Their stock was up as 4.6 intraday high of 2105, which is above the previous intraday record of 2097. This stock has been on a run just like Tesla was. All right, so Tesla's in the story. Nikola, that's like a cough drop, isn't it? But that's not the same
Ricola.
thing. No, it's shut up. I'm saying Nikola.
The cough drop's Ricola.
Oh, the cough drop's Ricola? Oh, sorry. I don't mean to say shut up. I love you like a brother.
That's right.
I do love you like a brother. And the SPX. Workhorse is another story in here. So that's one stock that's feeling the effect of pulling back in that space. Tesla Capital raise called a smart move. So now Tesla not only split, but they're raising money, I think like $5 billion. There it is, after disclosing a $5 billion capital raise. So not only did they split, they're raising money. Dude, but this is, I think, is a dilution of the stock. The split wasn't the dilution of the stock, but I think, and I could be wrong, and Susan, verify am I right or wrong, in the raising of the capital, if they're going to, I believe if they're buying back shares or putting more shares out there, and I'm glad that you're here to walk me through if I was incorrect or not. The $5 billion capital raise, tell me what that means. I'll do it that way.
Yeah, so they're basically raising the $5 billion, and it's interesting in the way in which they're doing it and the time at which they're doing it, because I mean, I don't know if anybody remembers when Elon Musk himself tweeted not so long ago to say that he felt that the shares were overvalued. I mean, in essence, Tesla can do whatever Tesla wants. It's the largest market cap of any of the car firms right around the market at the moment. It's ahead of General Motors. It's ahead of, it's ahead of everybody. So therefore, it can do what it wants. But when you actually look at the numbers of people who are buying electric cars, it is still only up to 5% of the US market, if I'm correct in that. So it really has cornered its own niche, as I know I'm telling people who are very familiar with it in this way. But in essence, what it wants to do is, it wants to buy some of its own shares back. I mean, why wouldn't it, based on the fact that it's up over 500% in the year? And it's a company that just keeps on going higher and higher and higher. I mean, the wildness of the PE ratio in that firm is just ultimately bizarre. It really, really is. I own Tesla shares a long time ago. I sold them before all of this was going on. I did make a gain, and it's a stock where I just think, I don't know, it's just gone off the charts, Glenn. I mean, even when I look at the when I look at the company, when I look at the way in which investors are treating it, it is just that Elon Musk can do no wrong.
Yep.
Tesla keep growing and growing. It's diverged completely from the fundamental analysis that you or I might know, and for that reason I'd be quite nervous of it. I haven't been in it, and I'm okay with that. I know I may have lost out quite a significant bit, but I'm always nervous about being in shares where I just think, what the hell is going on? And I think that's the case with Tesla.
This is a perception stock. That's what I want to call it. This is what people feel. You know, Tesla is going to take over the world as far as the electric vehicle. The perception is ain't nobody going to beat them out. And that's what I think is really, causing that price to rise. We're going to analyze it in a second. Another one in this space, Workhorse. Workhorse stock is higher because the EV startup, has a giant partner. I believe this came on with a partner with Hitachi. Oh, man, what did you do to my story? I think they got a partnership with Hitachi, Workhorse. There it is. Company. It entered an agreement with Hitachi America to help it develop a national dealer network. Interesting. So now, from Workhorse, national dealer network, to start getting these cars and these vans, more so vans, out on the road. Hitachi will also help Workhorse develop into manufacturing and supply chain expertise. All right. That is another positive factor, considering that Workhorse just started making and delivering its battery-powered vehicles. All right, so Workhorse is in this space. I've got one more, Ideanomics. This is a stock I didn't know much about this, but I came across this thanks to Clay. I came across this as a stock that's in this space, and you know something? If nothing else, if you hadn't known, you're being introduced to more stocks that are in this space, because these are stocks that can compete with Tesla. Not on a big scan, but you know something? If Tesla is a stock that you feel is too expensive for you to get in, these are a couple of other electrical vehicle companies that you can get into. Ideanomics soared 53% towards a 19-month high in very active afternoon trading on Monday, after the facilitator of the adoption of electrical vehicles announced an order for 200 EVs in China. So that was another thing that was happening with Tesla. We did a story on Tesla about its rise. They're doing more in China. If you're going to sell some of anything, or a big market to sell anything, is China. Why? Because they got people. They got people on top of people on top of people. They got a lot of people. And if you're going to want to sell anything, why not sell it to lots of people? So think about it. Ideanomics has got an order for 200 EVs. That's a start. All right. And if they like it, guess what? Then China will say, hey, we want more. And then we want more. And then you got all those people to sell it to. You ain't going to never run out of people to sell to. So that's a big push for Ideanomics. But ticker symbol IDEX. There's other companies besides Tesla that are out there, folks, that are in the EV field. Just think about that. And that's what this story is about. Other stocks that can compete, maybe not on the same level as Tesla, but in that space to take advantage of. Susan, you want to add anything before I go analyze them, or do you want me to go straight to the analyzation?
Yeah, I just want to, I suppose, look at this. There's a couple of things that are really interesting about EVs. First of all, is the perception relating to the issues. So, can they go fast? Can they go far? Do you have to spend your life, just charging them, and so on like that? And what's interesting about this is when you look at the retention of the EV market, is that generally when you go towards an EV, you don't come back. Now, that's one thing to bear in mind. So that, like, at the moment, as I mentioned, we've only got 5% of the market buying EVs anyway in the first place. But as that grows, should it grow? Now, should it grow? We'll also talk about something else. But should it grow, is that is certainly an area that is something that is worthwhile to be aware of, is that they are quite sticky. Because you don't have to go to the gas station if you can plug them in at home, assuming, of course, you're not living in an apartment block and so on. However, one of the key reasons, and I'm really interested in the comments of lots of people saying, yeah, but what about the EV supplementary market? What about people supplying into the EV market? And you guys are onto something. You're asking the right question. Because what Tesla has done phenomenally well is build a whole infrastructure around it. When you look at how it's maintained, when you look at the machine learning that happens, how the fleet updates each other, when you, like, even I was in one, about 9 months ago now, maybe 12 months ago. And I was interested when the person that I was driving with, it was her car, and she just said how even the playlist has there's a playlist totally dedicated for people who drive Teslas. So there's a real community feel to it. It almost feels like Apple in that when you get in, you kind of can't or don't want to get out. But one thing I will say about other EV companies is they don't necessarily have that. And they're up against, will I have a Tesla or will I have something else? Because if you're going to have something else and it's not just going to be on price, what else is it going to be?
Right.
When you're looking at supplying into that market, just remember that all of that has to be played for. The other issue is that there are other car companies out there that sell both. An interesting statistic that I came across in a piece quite a while ago is, and I have it up here beside me, which is that in General Motors was the original pioneer with the EV1 back in 1997. And 20 years later, in August 2019, so 22 years later, it still wasn't selling more than 1,000 of electrical vehicles. And you might wonder, like, General Motors is a good company. Like, why is that? I've had shares in that before. Is that actually the business model of an ICE vehicle, internal combustion engine vehicle, versus an EV means that when you have an ICE vehicle, is that you have got a lot more maintenance. So in essence, would you be asking your own salespeople, if you're not solely EV, would you really be trying to push them in that way? Or does the business model direct you towards saying to people, well, you could buy an EV, it is significantly more expensive. Obviously, there's all of these benefits. But on the other hand, we also have these great cars, lower price, and then off you go from there. So I do wonder, Len, whether the business model of companies that offer EVs as well as others, as well as ICE vehicles, maybe it's not just the consumer that is driving the continued order of the ICE vehicles. Maybe it's also the actual business model within those within the garages themselves, and that's the real one to watch.
Well, I look at the American companies going after the hybrid market, which is both gas and electric. I think that was out of necessity to keep up with some semblance of what Tesla was doing. Tesla's doing all electric. I think there's a couple of cars over here that are all electric. What is the Volt? Is the Volt all electric? I don't know. Nonetheless, I think that the major car companies over here were trying to keep up in that space by offering the electric version or the hybrid version. I'm going to come up to something that James says. Shouldn't we be looking for stocks for companies that supply the EV market? That's a great question. Somebody had brought that up to me in one of our other sessions. And you know what I did? You know what I did for you? Because I love you guys to death. I got a watch list for you. Tesla-related stocks. Who's your buddy? Who's your buddy? I got you. So Workhorse is in there. Aptiv is in here. BWA. Write these symbols down. And I've got them written on what these stocks do. Aptiv specializes in producing electronic safety components for auto manufacturers. Delphi designs, develops, and manufactures integrated powertrain technology. Borg specializes in supplying engineered systems and companies for automotive powertrain applications. Magna designs, develops, and manufactures automotive systems, assemblies, and components. TE Connectivity provides a variety of transportation and solutions, including connector, blah, 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 blah. I did some work to try to come up with these stocks. And you know something? I did that. You can't see my chart. What do you mean you can't see my chart? They can't see. What do you mean they can't see this? I don't got no chart up. These are just stocks that are associated within the Tesla, other Tesla-related stocks. So this is still something that's going to be in the works. I'm still trying to put something together a little bit more. But James, you put that out there. This is the closest that I can get right now from that perspective as far as Tesla-related stocks, and we'll keep working on this list. And if I find more stocks, especially battery-related, I will start adding it. But I've got a watch list now called Tesla-related stocks, and I'll try to keep finding out what other manufacturers fit that. What is this list under the watch list? You don't have this, Robert. I created that. Notice that I've created a lot of watch lists specifically for Trending Thursday. All right, because you guys are here, you ask a lot of questions about this, that, and the other thing. I try to make sure that I bring up and build specific watch lists for you guys from the Trending Thursday. So you don't have this. I created it for you. I created this for you. And where are they? They're here. I just said I created it. It's in my VectorVest 7. All right. You ain't going to see it in your 7. That's what I'm trying to tell you. I can't tell you any harder than that. You're not going to see it. I've created it in this VectorVest 7 for Trending Thursday. For Trending Thursday. All right. So I was looking at SHLL. It's some kind of a company, an acquisition company. I wasn't sure if that was the right stock. I looked at it. SHLL. I will add it. I know it's an acquisition company. I looked at it. I wasn't sure if that was in there. It told me that it was, but I wasn't sure. But I will put that in there. Glenn, can we get your username and password? Yeah, that ain't happening. What you talking about? Man, you I ain't got time for that right there. I'm just trying to tell you, I ain't got time for that right there. But
that's a compliment, Glenn.
Say again?
That's a pure compliment.
I am going to build this watch list. If I can find more battery manufacturers and things like that, I will start putting them into this list. All right, so I wanted to bring that up as something that I did pay attention to for this segment. Let's go take a look at the stocks that are here. 9.3. Joey's saying I got a nervous clicking going on. Sorry about that. I'm working. All right, so Tesla was in there. NIO, Workhorse. IDEX. Oh, I hate when that happens. Tesla, NIO. How many stocks? 1, 2, 3, 4. There they are. I'm not going to even analyze them. Let's go look at them on the graph. Let's go look at them in the graph to determine whether or not these are stocks that you would buy or not right now. How did Apple get in there? Wow. Did you not see me highlight these stocks? NIO, Workhorse, and IDEX. Okay, that's what I got. Let's try this again. View the stock graph. So these are all in the EV field. Let's look at Tesla. Tesla getting smoked. So somebody told me that they were down a lot of money in their Tesla stock. Well, let me tell you something. No matter how good a stock is or how bad a stock is, but no matter how good a stock is, this is what stops are for, folks. If you're telling me that you're down a lot of money on there, I'm going to tell you why. I'm going to ask you the question why. I will preach to you, have stops to fit, to get out of the stock. So let's do something. Let's go put on a 20-day exponential moving average. Man, even with that, you'd still be in it. There's the split. It all depends on what your moving averages are, what your stops are. If your stop's still heavy in the stock, it is what it is. All right, there's no getting around that. And the question is, so what should you do now? The answer to that question is let your stops manage the trade. That's it in a nutshell. Let your stops manage the trade. I'm going to always be a big fan of that. The stock was really rocking and rolling. But another thing, one white shoulder candlestick, could that have been a possibility of something to get out with follow through? Possibly. All right, learning to read candlestick formations along with stops, whatever it works. You should never allow yourself to let a stock run away with a big loss against you, ever. Or even as the stock's price hit a new high and then started pulling back, what's to tell you that why not take half off the table after the stock pulls back after hitting a new high? Nothing wrong with that either. All right. Another thing, and I'm gonna spread this into something that Susan can talk on. Learning how to play options. If you like the stock long term, the stock starts going down. What's the best insurance policy you can put on? Without even a spread, a simple insurance policy. Buy a put on it. Buy a put. Now you own Tesla long term. You like the stock. That put now kicks in from that strike you bought. Let's say you bought the 50 strike or the 500 strike. Stock's price is going. You got full protection on the stock that you're still trying to hold long term. And the reason why I bring that up because options is a good way to protect any stock, especially if something like this happens and you're in it trying to hold it for the long term. Options are a great way to go. Susan, you want to say anything on this one?
Yeah, sure. Yeah, I'm going to pick up on that point. Just actually, somebody did put in a question there. It's a long time ago in the chat stream now, but they did say that they know that I like to sell puts, and either whether they're naked puts or whether they're put spreads. And they're just asking me about time. Now, one of the things that I absolutely know, and that everybody else knows as well, is that time will pass. So I know that if I sell time, then I know that definitely that is going to pass and I am going to get the time value. Now, therefore, I don't like to go out too far. And the reason that I don't like to go out too far is because I don't want to give a stock too much or too much time for me to be wrong. But also, if you go out very, very far, you're actually not getting the most optimal amount of time value. You're getting paid for your time, but actually you can capture, the theta is different. And I won't get into theta right now because, of course, that is quite a complicated area. But when it comes to in the money, out of the money, that's another question that has just come in there. And we could refer to this to Tesla, or we could refer this to lots of stocks. Let me tell you a story about a company that I brought up on last time that we spoke about on Trending Thursdays, and that is Paychex, right? Beautiful stock, Glenn, boringly profitable. It's one that had a dividend yield of over 3%, had higher, like relatively decent RV, decent RS, lovely, all sorts of everything when it came to earnings per share and so on. Anyway, I decided I was going to sell an in the money option, and particularly the reason I sold a naked in the money put option on that stock was I was simply willing to hold it. So I was happy for someone on the other side of that trade. Let's say that person is Glenn. Glenn decides to buy a put option and that I'm going to sell it to him. Glenn wants to make sure that he's got a floor underneath his stock, and he wants me to put that floor there. I'm happy to do so because I'm happy to buy that stock off him. He's happy to pay me, and I simply sit and wait to buy the stock. Now, that option expired worthless 2 weeks ago. A week last Friday, to be precise about it. And I simply kept the premium, and what I did was that I simply did it again. I sold a put option again, very same way, and because the stock had moved up, well, then I moved up my strike and so on like that. And I spoke about that a lot, actually. I went into a lot more detail on that in the most recent international user group that Stan ran. That was on the 4th of August that I spoke about that in detail about how I picked them. So when it comes to in the money versus out of the money, the question that you really need to consider is, do I want the stock or not? The more you want the stock, the further in the money you go. The more that you don't want the stock, well then the further out of the money you go. Personally, if I'm ambivalent, and I often am, because what I'm quite happy to do is I am quite happy to sell option premium after option premium after option premium, and particularly at the moment where volatility is quite high, I'm super happy to get paid to wait to buy the stocks that I'm happy to buy anyway. Now, if you're going to look at this, and there's a range of other experiences that you can have in the options market where you might take a different approach. Let's say, just like Glenn says, where you want to buy puts. If I was going to buy a put on Tesla right now, I have to say I'd be getting ready to dig deep into my wallet, because obviously today, given the fact that the price of Tesla is down the way it's down,
premium is going to be a lot.
Yeah, at the moment, I think based on what I saw there on your screen, Glenn, I think we're at 8% right now. So and a little bit more. Now, even if you go back before that, though, you'll see that the price has been volatile on the way up, which means that it has been going up and up and up and up. So the volatility that you're going to pay is quite significant. The higher you insure it at, no more than the higher you were going to insure a car at, well then of course, then the more expensive that it's going to be, and then of course you've got time value as well. So with insurance products, certainly if you are looking at buying something, when I talk about insurance products, just remember there's 3 things that drives that. Number 1 is time value. The longer you insure something for, the more you got to pay for it.
Right.
The more volatile it is, the more you got to pay for it. And the higher the value that you want to insure at, the more you have to pay for it. So me personally, if I was bullish on Tesla, what I would do, if I was bullish on Tesla and I'm not really sure if I wanted the stock or not, maybe what I might do right now is, given where it's fallen at today, is that I would be selling a put, possibly striking it at 400 or slightly lower, taking in that lovely juicy premium and deciding on the time that I would be willing to wait. The further out you go, the more that you're going to get paid. But just remember that theta, that is the decay, the time decay, that does change according to certain time frames. And I don't know, Glenn, is it okay if I elaborate a little bit further on that at the moment? I'm just conscious that this is your show, and I don't want to be taken over. But one thing that I did want to mention that is going on right now is it's something to do with volatility, and it's to do with the fact that there's certain times that volatility can be super high, right? And I don't mean today. I don't mean today at all. I mean that the options market, when you see people buying calls or buying puts, right? If they're buying calls, they're really bullish. And that's a lot of what's going on today, is there's been huge bets on Zoom, on Apple, on Tesla, etc., through buying long calls, right? So you see lots of people are buying calls. And when people are buying calls, well, then that's telling you that they expect the stock to go up, and they're buying calls so they can have the leverage in order to do so. So they buy lots and lots of them. Then you've got people who are actually thinking of buying the stock, looking at this and saying, if there's lots of call buyers out there, maybe then as a result, there can actually be lots of buying energy behind it. So then you get people who actually buy the stock. And then you get the call buyers going, well, now I've made a lot of money, and we have the self-perpetuating cycle. The thing is that what if they're buying puts? What if you're seeing an awful lot of people buying puts? What happens then? Well, then, of course, then what you've got is that you've got an environment where people are very bearish, or else they're protecting against bearishness. So I may not be bearish on Tesla, but I might be buying a put option on that. We call that a protective put if I have the stock, and if I buy a put option as well. I just want to buy a protective put on Tesla, and from there, then I know that I'm insuring myself against any decline should it happen. That's not to say that I'm bearish. That's just being
protected. That's insurance. That's all that is insurance.
That's all it is. So therefore, it may then on the other hand, you see people who are thinking, oh, okay, well maybe if there's more and more puts being bought, well then that's pushing a lot of bearish sentiment in there. The key thing is though, is that what I looked at was where the implied volatility. So implied volatility is where people are buying more of either calls or puts depending on what they think. And guess what, ladies and gentlemen, there's a lot more people buying puts and calls in the American market in early November. And actually what I find really interesting is that the markets are now getting quite jittery, is that are we going to have what they call a clean election? Because if there isn't a clean election where there's a clear winner for whatever reason, well then of course the market is expecting to be a little bit jittery after a while. So actually, it's a long way of getting around to this. But if you were looking at a stock that may not necessarily be broadly affected by what's going on in the market, it's a very interesting time to be selling options around October, November right now. And that's why I'm looking at that for paychecks again. Long story, Glenn. Thanks for giving me the time to talk about it.
That's all right. You know something? I'd give you the shirt off my back, because if you needed it, I'd give it to you. That's all. It's all about that. JF says, thank you. She explains so well options. Sonny says, Susan's a great asset here. Let her run it. And you notice I just stepped back. Joey put her up on the screen all by herself because she got into it, and I'm all for that. I'm okay. You know? Yes, this is my YouTube channel, but again, I respect you 150, 11,000 trillion billion %. If you got on a roll, go. Let these people know what you know and whatever needs to be said. So, that's all right. Listen, I'm a guy. I'm a cool guy, and I'm not an egotistical guy, huh?
That's a stretch.
Now, I'm not an egotistical guy. Whatever helps you guys, that's what this is all about. This YouTube channel still, we give the content, but if it helps you, that's all what it's all about. Why did the camera do that? Why did you stop breaking stuff? All right, stop it.
We'll try.
Listen, you know what that means? You know what that comes up to? That's right. See, Susan can't hear my sounds, but I just gave the punch-out sound for Joey. I just knocked him out. All right. John says, Glenn, you need to coordinate clothing with Susan. You know something? I could have wore the shirt that looked more like her color. There is a lot. Listen, it would have been a lot more blue, but listen, there's a contrast. I like that. We look like Skittles. I think we look like Skittles. All right, let's look at the other stocks real quick. We're not going to really go through them a lot. Let's go look at them real quick. NIO looks a lot like Tesla, for a lot less money. See, do you see that? NIO looks a lot like Tesla, but for a lot less money. All right, that might be, again, all I'm saying is it could be a viable alternative. Another one, Workhorse. Workhorse is a little bit channelization. We got some channelization going on right here. I'm not sure. Workhorse needs to break out one way or the other. before I really am comfortable jumping on board with this stock. There's the swing high, right? Yeah, that's a good level of resistance right there. I'm going to leave that. That's a good level. But the stock is definitely in a channel. I'm not ready to pull the trigger on that, even in this space. And the last stock in this list is IDEX. Woo! Yeah, I'm not ready to touch this at all. At all. Not at all. Even though it's in the news story, I totally understand that. But, yeah. I'm not ready to touch that. So, Susan, I gotta keep moving a little bit. I just wanted to look at the other graphs as compared to Tesla. And